Everybody, good morning. Good morning. Good morning. Alerts going off like crazy. The jobs report causing some volatility. Crazy enough. Imagine that, right? We're sitting here near the top. If you're looking at ES1 exclamation point, you may be like, holy blank, what the heck happened on TradingView? It was the contract rollover. All right, just type in ESZ 2003, or I mean 2023, excuse me, 2023, ESZ 2023, and you get a chart that looks like this right here. ESZ 2023, no craziness. Well, I mean, we have some volatility this morning. If we go down and look at the 5 minute, you can see we dropped about a few points, and then rallied right back. Now drifting off a little bit. We'll see what actually happens here as we get into the open. So, volatility, name of the game here. And the big event, the big main event next week, FOMC coming up. What's that going to lead to, right? Big question, right? Big question on everybody's mind. So, Dex, Sergio, Penny, Valerie, Logan. Logan, I don't recognize your name, but welcome. Arturo, Merle, Mary, Rongamer, Michael, Ben, Diana, Craig, David, JB, Jeremy, Catherine. I still want to say Kathleen. Brian, Mark, Diesler, Kevin, Cliff, Diesler. Don't recognize your name. Maybe I do. I don't know. Cliff, Darren, Don, Dave, Rongamer again. Boogie time. Michael, Suckbeer, Ted, George, Tara, Al, Terrence, Goose, Lieutenant Colonel Goose, retired. Glad to have you. Val, Jason, Ray. If you want to chat with me like these fine folks, all you got to do, hit the button right over here in the bottom for the subscribe to the channel. You can chat while I'm live. If I'm no longer live and you're tuning in later, just leave a comment down below if you want to talk to me. And if you want to jump in the Discord where my community is, my family of traders, most of these people that are chatting on the live stream, the link is in the description. You just got to click the more button, where it kind of describes what I'm talking about. You click the more button and you can see a link. It's like $5. I mean, if you want to support me, but you don't have to support me. That's cool too. This content is free. I do it almost every day. Well, I've only missed one day since I started doing the morning shows, and that was Thanksgiving. I took the day off. I'll probably take Christmas and New Year's off too, just so you know, it's coming up down the road. And I mean, need a day off, right? Anyway, all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. I may never get one of these predictions right again. Sometimes I get lucky. I mean, hey, we've had a few lately, right? This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling, longing or shorting any stocks, any options, any cryptos, any forex, any futures, any bonds. Don't buy them, don't sell them, don't do anything, don't trade, all right? It involves a substantial risk of loss when you trade. And don't buy stuff from gurus that you don't trust. Like if you trust me, you want to support me, the link's in the description. But otherwise, don't buy stuff from people that claim, watch out. Most of these, like, how many people have been in one of the hour-long webinars or hour-and-a-half long webinars where they lay out all this awesome like new technology they found, this new pattern they found in the market? That's all written by copywriters. All right, it's not even written by somebody like me. I mean, I do them because that's how I put food on the table. But usually it's like $500, $1,000, $1,500 product. And those are all written by copywriters. They hype it up. The real deal story, it's usually less hype and more truth bombs. You have to read the fine print. So I do have a couple strategies that actually win 100% of the time, and they're not quite as glorious as the sales thing says, but So make sure you trust somebody before you buy. That was the bottom line of that. The moral of the story: make sure you trust them before you buy them. Make sure that the person that you're listening to at least has some credibility. Hopefully, I get lucky enough that I have a little credibility. That's why y'all are here watching. All 90 or so of you right now on the live stream. And if you desire that personal financial advice, though, it's not what I do. You got to hire and consult a financial advisor. I can't give personal financial advice. I'm not registered for it. That's not what I do. I share what I'm doing. I share what I see. I just happen to get it lucky and get it right sometimes. But you know, it could all burn down tomorrow. I could be wrong starting tomorrow or starting today and never get it right again. Entirely possible. So make sure you have a plan, follow your plan, because it's not being wrong that costs you money. It's staying wrong. Don't stay wrong when your plan goes south. All right. And make sure you're trading at a size that you can sleep at night and not worry about if everything went to zero. I mean, let's be honest. Things can go bad, all right? So we had average hour earnings coming in, we had non-farm employment coming in, and we had the unemployment rate coming in. Unemployment rate, whoo, smoke, like this thing's still smoking hot here. I don't know. We'll see. We got consumer sentiment coming up at 10 a.m. Another 40 or 39 minutes, looks like. And we'll see. These numbers are coming in hot. I think that's what caused the initial drop here. Then we rallied right back up where we were. I don't know. Is this a setup for going lower? Or is this a setup for going higher? Looks like, when I zoom out a little bit though, it's just more chop. What do I say all the time? I mean, it doesn't matter the time frame. What does that chart look like? Anybody in the chat at all? What do you think? Let me know. Yeah. Exactly. Sideways, choppy crap. Sideways, choppy crap. And we've been in this for... We came up here, and we just been in this sideways, choppy crap. Now, is this topping crap, or is this consolidation crap before we pop again? Indecision. We had the highest high right back here on the first. And that's no trend. Like, that's hard to make money. I mean, you can trade the range, but until we break the range, which was basically set right here, November 30, December 1st, we set the range, and we've been in that range for a while. We set the limits of the range right there. All this higher low, lower high, slightly lower than this one, but still higher than this one. Lower high, and just consolidating. It's related to the watermelon seed squeeze. It's not squeezing down quite as tight. It's related. Are we going to pop up? Are we going to pop down? Well, that's the question. That's the big question. And with the rally that we did right here, odds are we may need a flush before we can go higher. Now, the teaser, the whole title, the thumbnail of the video, we haven't had this big of a money supply contraction since the Great Depression. This is, we actually haven't taken the money supply, the M2 money supply negative, basically since the Great Depression. And where is this going to lead us? This is, Goose and I were having a conversation. I was thinking that maybe, I don't want anybody to panic, all right? Don't react right now. I just want to throw this on your radar that typically it's about 18 months from the bond inversion, when bonds invert, to a recession. All right, 18 months. So when did that happen? Anybody remember? It was October 2022. So we do our math. 18 months, so 12 months, October. So November, December, January, February, March, April 2024. April 2024. Now, that could be the start of the recession. So typically a recession hits about 18 months after the bond inversion. Okay, so that April, that's on the calendar. What else happens in April? Bitcoin halving. Okay, that's kind of a positive, or at least could be a positive for Bitcoin. So we got 18 months from the bond inversion. We got that. And now 24 months from a rate raise. It takes 24 months for a rate raise to trickle through the economy. So we did that first rate raise. Just jump over the chart and just, actually look at it right here. We did that first rate raise back here. March, late March, almost April 2022, 24 months. Let's see, March 2023, late March 2024. Oh my gosh, that's April 2024 also. There's some stuff lining up for April 2024. Is this good stuff? Is it bad stuff? I'm not sure. This is a cautionary tale, though, at this point. That's where this first rate raise fully has been baked into the economy. And it's not the stock market. We're talking about the economy, the real economy. The last one is going to be, if this was the last one, we could raise rates again with everything going so hot. I think that's why the initial knee-jerk reaction this morning, that orange line is the Fed funds rate, and right there, FED, FUNDS. This is the 2-year constant maturity rate chart. It's the real market rate versus the Fed funds rate. Running a little light for the Fed funds rate. Now, do we get an acceleration higher like I kind of speculated on? Or do we actually have some sort of financial crisis and we have to cut? So this is M2 money supply tightening, TMS tightening. So I don't know. We haven't done this since the Great Depression. Could this be the start of a recession? Maybe. Could it be the start of a greater depression? Maybe. Could it start early? I was kind of thinking that we may not start it till 2026 after the halving run and all the excitement. But I just want to throw this all out there for everybody. All right. Don't react yet. Don't sell don't sell all your stocks, sell all your bonds, sell your wife, sell your kids, sell the house. I'm just throwing this out there, all right? We have some time yet, and more events are probably going to unfold. Now, banks sitting on the biggest, unrealized losses ever too. So there's a financial crisis brewing, all right? How's it going to unfold? Not quite so sure, and I think we're going to see, my speculation, I think we may pop an all-time high. We're not that far away. We could pop an all-time high. Let's throw this over here. Pop an all-time high, possibly even get up to like 5,000. And then watch it all burn down. And that could all happen maybe starting Q2, maybe starting Q3 next year. Could. So stay tuned. I'm gonna keep up. We'll keep up on these as they develop. I just want to throw that out there though. These kind of events, it's kind of like there's storm clouds on the horizon. Is the storm coming? Is it going to pass over our farm, or is it going to blow by? Right. Narrow miss. Are we running the edge? Does it happen? Do they hover it? Do they, sweep the nasty under the rug until the election, as Goose says. You know, I don't know. How long can they keep putting lipstick on the pig before the lights at the bar come on? So this is a concern. I am concerned. All right. And I wouldn't be talking about it today if I wasn't actually concerned. And I thought that everybody should be aware, you know, let's not be complacent about this. You know, there are some threats here, but don't change everything right now. Just there could be upside left before we get there. But I just want everybody to be prepared. What I'm seeing potentially kind of stacking up here. All right, and you know, maybe something crazy happens that we don't even. I mean, could be something crazy that actually comes down the pipe and does something wild. Now, what might happen? So, with the money supply dropping, and here's a chart that's a little crazy. Let's pull this up real quick. I want to show you something. This doesn't usually do this, and look at this move. Look at this move yesterday on the yen. Look at that move. That's not normal. I thought we'd go back and hit the roadmap line, but that big a move is not normal in one day. I mean, we tend to run for a few days, but that something was going on. All right, and get my tickers right here. The euro came back to the roadmap line. Now, what's going to happen? You know, could all of a sudden the dollar not be the world reserve currency? You know, it could happen like faster than we know what to do. I mean, it could just we have a some kind of problem. You know, house of cards. All of a sudden we default or we can't pay something. We oopsie. Everybody dumps the dollar. This thing dumped off. Worldwide, things could skyrocket. Like, say, gold could skyrocket. Bitcoin could skyrocket. So we could see some crazy potential here. Could see commodities skyrocket in dollar terms, but not necessarily in other currencies. You know, a lot of things are priced in dollars because that's the world reserve currency. We kind of transact, you know, worldwide in dollars. What if that suddenly ended? I mean, what if it rug pulled so fast we can't even comprehend it? What if? There's lots of, you know, Janet Yellen and Jerome Powell both saying that would never happen. How many currencies have lost their world reserve status before? It was like 30, I think, when you look at it. At the history of people using money. Maybe it's 24. I don't know. That's, you know, it's quite a few. You know, I think that the pound was the world transaction currency before the dollar took over. So this has me concerned. I mean, I'm not gonna lie. Like this, what's macroeconomic wise? What's gonna happen? I mean, and then how does it play out in the stock market? Right? Typically, when we see the dollar drop, we see the market kind of rally. But what if the market and the dollar dropped at the same time? Like seriously dropped. Then what? Yeah. Um, yeah. I mean, both Yellen and Jerome Powell. Jerome Powell in the speech last Friday told the students that the dollar was always going to be the world reserve currency in the speech he was talking about. So, yeah, hey, maybe there is no one right now. I mean, maybe it's Chinese yuan, maybe it's rubles. You know, we're being pretty careless with everything right now. So, yeah, be careful. All right. Nobody knows, and we don't speculate. We just react as the story unfolds. So, yeah, central bank, like Russia and China are buying gold like crazy, like in volumes that we've never seen in the history of the world. Maybe gold's the new transaction. Maybe gold's the new settlement. Maybe Bitcoin's the new settlement. Maybe Bitcoin or gold-backed Bitcoin is the new settlement. All right, so don't speculate on. I mean, there's lots of potentials. We don't know which way it's going to go yet. I just want to throw this all out there, though. You know, does JT sit here and read tons of reports? Yeah, and you know, speaking of reports, one of you called in a favor at Bank of America and sent me the trader report I've been looking for, the whole thing. I thank you so much for doing that. Interestingly, Bank of America not really calling for much action on the CTAs. I thought that was really interesting. Only in the case of a big down where the CTA is going to react. Otherwise, it was just kind of hover on all the cases. So they're not I guess nearly as bearish as Goldman Sachs, and that's what I was kind of thinking. Is why I couldn't find it is because it didn't say much. So Bank of America just kind of thinking we're hovering, unless we start getting a big suck down in the market, and then they're estimating that those CTAs are going to react negatively. So, yeah, can it go higher? Yeah. Can it go lower? Yeah. I mean that's right, Muku. That's 100% right. And can correlations break? You betcha. Like, can we flush this whole thing down the toilet? Yeah, dollar and the market could drop at the same time as the dollar lost its reserve status. So, if I've said anything here that was eye-opening or new or informative, helpful, make sure you thumbs up me, react, give me some love on the chat, and I just want to throw that out there. We've got time, so this we've got time, but at least hopefully my eyes are open to it, and I'm going to be able to help you navigate it. So make sure you subscribe, make sure you hit the alerts with the bell with the things so you know when I have a new video coming out, new live stream. That's the best way we can communicate, right? Unless you get in Discord, and then you really know all, even the actions I'm taking. So I share with people how I'm positioning in Discord. So anyway, let's talk about what's actually happening, crapping today, right? So as I said, ES1 had a contract rollover, created a big gap up. That's what we're seeing right here. That was what that is. That's the contract rollover. So if we actually look at ESZ 2023, 23, not 32, right here, you can see just more sideways. And not popping big. So, and for those of you that wonder, what the heck, JT, you use ES1 exclamation point. Well, it does a contract rollover. The December contract is expiring in a few days. So what do we have? We get this chart right here. Just show this. Every contract rollover lately, I've been showing this. We get this divergence. This is the spread between ES1 and SPX, the cash index. As we approach the expiration, we bring that spread down to very close, very tight, and then we pop it again. And I meant to do a subtraction instead of a There we go. And zoom it up. So last time, back in September, we had about a 53-point divergence. We ran that down close to about a 5-6 point spread between them. Now we're back up to about a 50, roughly 53 point spread between SPX and ES. And this will bleed down again. You're like, hey, does that present an arbitrage opportunity? Yes and no. Yes and no. The market knows it's going to do this. So it happens every single time we get a contract rollover. All right. And when, some contracts we get it actually goes negative. You get a negative correlation. And that's where you get contango and backwardation. And that's one reason why when you look at VX, 1 exclamation point minus VIX, you see how this one is positive sometimes and negative sometimes. That's where those leveraged ETFs lose their money. We actually get negative spreads. All right. And yeah, and my actual family is in Discord too. Kimberly says she's in there. You can tag her. So it is my actual family, my family of traders and my actual family. So friends and locals, and I have Discord's a happening place. So you wonder where some of the costs to maintain VIX, like how come a lot of those long VIX leveraged instruments go to zero? It's because of this right here. We get negative spreads and we get positive spreads. So hopefully you've learned a ton of stuff here today. All right. Hopefully I've covered lots of stuff. Now, the contract rollovers, for VIX, they happen more often than for ES. ES happens 4 times a year. VIX tends to roll, I think, monthly. That's why you see these these pops and drops happen more often. So, how do they, so how, Steven says, how will the roll impact the range-bound numbers on futures, if at all? Well, you just have to go to ES. What's the ES? Crap, I can't remember the March contract. MUS. I can't remember that. Dang. I'm gonna have to look up the futures letters. H. Why I couldn't remember H. So we look up ESH 2024. Zoom her up, Buttercup. Right there, you can see how it's been, there's the range. All right, the contract's been going. It's been trading. It's not like it's a new contract born today. This contract has been around for a while. It's been trading since all the way back here. Looks like they created it back in August of 22. Nope. There's some little blips before that. So this thing's been around for a while. There it is. Created it late 21, December 21. So this thing's been hanging out here, trading in the background. So this is now the front month contract for ES. ES 1 exclamation point is the constant contract, they call it, where it automatically rolls over to the new front month as we expire. So that December contract expiring in a few days. And here's the March one. The March just been hanging out. If you didn't know how to find the specific contracts, then the letter codes are right there. F, G, H, J, K, M, N, Q. There's more. U, V, X, and Z. So right there for things that expire monthly, like natural gas, oil, you'll have all these contracts. For things that expire 4 times a year, you'll have March, you'll have June, you'll have September, and you'll have December. That's like ES in Q. All right. I don't have those letter codes memorized because I don't, I haven't been, I've only been trading futures for a few years, and I just usually let the platform roll it over for me. So you just have to reset in your mind just a little bit. The difference here, and this difference bleeds off as we get as we approach expiration, and then we get the gap again. All right. So just want to take care of a few different things that are happening, crapping in here today before we get too crazy. So the high in the March contract still up here. So really, that's where we need to break. All right, got to break that to break the pattern for the downside. Now, it can just be simpler to look at SPX right now today. So SPX still needs that pop above 4607. Yeah, you just, the uploaded Discord, you just push the plus button right next to where you type messages in. There's a plus button, upload a file. Long as it's like, I think for free members of Discord, I think you have like a 50 or 100 megabyte upload. You can just upload it to the server, and it'll be there for everybody. So I just Google stuff. I mean, that's pretty simple. It's always the same. It never changes. It's probably on CME too. So I couldn't remember H. I can remember M and Z and X. Anyway, moving on. NQ, of course, has the pop, but when we look at NQ, you can look at the same H 2024. We're not making a new high. We did right there. We made a higher high than here, but we're still lower high. We're still just churning in that box. That was a massive move up. We may retrace this back. At least, this could easily go back to the roadmap line here. So you may be like, what the heck is NQ? That's QQQ right there. We may come back to the roadmap line. Same zone. We may go extend, the target up here was 396, came up just a little shy, but we may retest the trend line, like right there. I mean, it's kind of all coming together. The 50% retrace, the 618, all there, right where the roadmap line is kind of hidden. This could all happen next week. Now on Wednesday, could just drop down in there. FOMC meeting. So ES, that's SPY, SPX, SPY, all the family of ES stuff right there. And we may pop that higher high and then drop. I was talking about that yesterday. So S5F5 back above 80. We dipped. Do we pop and then drop? I don't know. Quite possibly. All these things are kind of coming together here for, keep your timeline. And, I talked about macro. We're talking about years worth of greater depression possibly. Now we're talking about what's happening in the next week, 2 weeks, stuff like that. So don't get confused on your timeline. Make sure you have your timeline that you're trading, your positions, and stuff like that. So I was concerned about talking about the big picture because I don't want people to take big picture actions on their small time frame trades. Keep your timeline in mind when you're making decisions. So this one, Russell, IWM, is the ETF for this one. And interesting. Consolidating right here on that 1272. If we can do a retrace, hold at 50 to 618 retrace, that would probably be a wave 2. And then we remove the corrective action here. This could potentially be an impulsive, like 1, 2, 3, 4, 5. Could be. That could be a wave 2. And then we could go up pretty significantly on Russell. This is one I'm keeping an eye on, whether this is corrective or impulsive. So right now, what am I talking about? Elliott wave-wise. Chapow. So that could potentially be a 1, 2, 3, and kind of a running 4 and a 5 right there. Just barely didn't overlap. Just barely saved it. The 4 could be here, but it really consolidated out. Kind of was a running 4, which is kind of bullish. And we may see this 5 actually extend up to 1922 before this retraces. We could pop it before we drop it. Entirely possible that we pull the range up just slightly. If we do that, we hold here, turn back higher. That would be a huge upside potential. Kind of huge. Talking about somewhere around 21 to 22. Now look, there just happened to be a target right over here that aligned with that. So we could see that on Russell. So if we do pull back, that'd be the opportunity to load up for a longer term, maybe out to April of next year. Catch that run, and then what happens? We'll see. All right. Could be an A. This could be an A wave up too. This could be an A with an impulsive move. Could get a corrective B, and then we could see a C that pops up here, and then down the toilet. So if we get that, it doesn't matter if it's an A, B, C, or a 1, 2, 3. Target's still way up here. Could be a huge opportunity. All right. Could be. And it shows up right here on IWM. Same potential. We'd pop up this 191. We get the retrace. That retrace would look something like this, 175 area. And then game on. So oil. Oil. Right down to that 70 area. Poked briefly through 69 yesterday. One little poke and then recovering a little bit. One little poke. I've said this 100 times. Probably say it a million more over my lifetime. One little poke does not count as invalidation. All right. Got to get continuation. The market has the habit of pushing the limits just before it reverses. All right. Testing my limits. I'm on high alert. I've been watching this thing like a hawk. Actually turned my my daily down to a 1 hour on my other platform. Now watch this like a hawk right now. Watching for any kind of continuation below 69. If that was it, if we start breaking back above the trend line and making a reversal, it's game on for going higher. But we have several layers of resistance above us. So I did not stop out of my UCO position yet. I did not close it yet. Still holding. All right. We're going to move up and a retrace. Holds a higher low. It's game on. Yeah, I did buy aggressively here. And now I need this to at least make some sort of move up. Some sort of retrace to a higher low. 618 retrace would be beautiful. I'd probably add more there. And we could catch the potential. Move up. Gold. Still thinking, we're at that 618 retrace. If we hold here, so there's actually a trade here now. If we don't break below, if we just hold this area and it's the orange box, and I'm going to go to a clean chart so I can highlight this setup. This is important right here. Very, very important. That move right there. We're just talking from November 10th up through December 4th, we're sitting right here at that 618 retrace. If we break above these highs from the last 3 days, 4 days, that's a long entry. For my measured bounce system. All right. The target conservatively would be that 2241. Now, if we get below, and this is a zone, it's a fuzzy zone. Remember what I said just seconds ago about it can push the limits, and the limit is actually down here at 1983, but less awesome of a measured bounce potential if we do that. So really the invalidation here is this one. Then we're coming back to at least the roadmap line. And if we get below this zone, we're probably coming back to the roadmap line anyway. And if we get below that, we're going down here. And this thing was probably, if we do that, this thing was a 3-wave move. And we're probably going to go to extend the fib line. Actually, let's just move that other one over. Come on. We're probably going to go right down here. All right. So there you go. There you go. And Fed now may end up being like one of the reasons that the dollar blows apart. Wouldn't that be crazy? Their own unraveling. Anyway, Bitcoin, look at that move today. Back up, retesting the highs. 46 is kind of my upside limit for now. I'm not sure we're going to get much more than 46. We'll see. I was thinking we may rally into some kind of spot ETF approval and then buy the rumors, sell the news. Now, there is a growing possibility, potential, that we actually pop a new high. Golly, excuse me, a new high. The excitement around spot ETF could pop a new high. We could retrace severely into the halving before we actually start the real halving run that takes us up to like six figures in Bitcoin. All right. Well, Patrick, welcome to the stream, my man. You're going to have to rewind and re-listen to the whole beginning here. Ethereum poking on up. Looks like we may be on the path to the 2,500. I stepped off on my extra, my leverage. Still hanging out 23.91, but they're looking pretty strong. There's lots of cryptos, like another one that fired off this morning for an entry for me for the way I trade these things. I'm looking at ADA here. This has a potential. I actually bought like 40 coins this morning, super early. Yeah, 40 is not much at 50 cents. So it's only like 20 bucks. Throw a 20 at it. And yeah, we could get a retrace from this area. So be careful. But look at the bigger pattern. We could be on a path right back up in this area. If not, busting on up through. It says a little bitty pattern in here. Breaking above that high was what I wanted to see for continuation higher. We may retest that zone before we can get the next move. So, yeah, lots of stuff had a great pop in the last couple of days. And Solana, which has been one of the biggest gainers of the year, breaking on higher. Targets in the 90 and 150 area. Top and bottom of that consolidation from back here in 22. All right, that's crypto. Moving on. What's moving in the stock market today? Got a big pop on INTS, but that is a biopharma, med tech. I don't trade this stuff. And that's not enough history to even draw a roadmap line, so nothing. MBI, that's a downtrend. That's a pop. And they lose money. That's not my combination of stuff. But I'm like, all right, that's a good trade. No, that's no bueno. It's just right up to the prior high. If it holds it, and I mean, this thing can go lower. This thing could go out of business. Let's be honest about this. All right, things are not looking super positive here. Let's even look at what's their malfunction? Revenue, declining revenue. That's not good. Earnings don't look great. Net income looks pretty crap. I wonder what that is. Non-operation expenses. They've got a lot of expenses for something. I don't know. That's non-operating expenses. I'd stay away from that one. I don't care. I mean, got a buyout or something. Extraordinary cash dividend. I don't know. That's stay. Extraordinary cash dividend is a one-time thing, so it's not like you're getting multiples of that. FSLR still. I mean, it broke the head and shoulders pattern. It's nasty, gnarly. I mean, maybe it's making a different head and shoulders pattern, but that's a downtrend. That's nasty. Can go lower. ALB. That's still miles away from the roadmap line. Consolidating at the bottom. We're still in the range that we set. Right back here. 3 days. Just consolidating at the bottom. CARR. Carrier Global. Air conditioners. Hey, that could be that was a correction that finished at the target. High to low. Potential entry for 63, possibly 68. That's the first positive one I've looked at today. I would expect at least that. That's basically a conservative entry. Soar. Oh, I think this was on the list a few days ago when it was popping. Now it's murderized, dropping. I think it showed up when we were popping. Now we're doing that. Yeah, untradeable. Untradeable for me. Roblox. That's probably going to come back to the roadmap line. I mean, they lose a lot of money. Nice revenue, huge cogs for the revenue. And then operating expenses, take them to the negative. Yeah, that's not what you want to see when you grow your revenue, but you grow the net income to the negative side. That's yeah, I don't know. I don't know what the plan is for making money, but that's not pushing more volumes. Doesn't seem to be it. You know, economies of scale. SPX just stopped. Yeah. It's so close to get. It's not going to surprise me if we get 4607 or better. Like we're so close now. So close. We're back where we were last Friday. Circle back real quick. Circle back. It's like circle, not square. Last Friday, right back where we were. Look. Would not surprise me one bit to pop the higher high and then plummet. So just that's an inability to keep. I mean, we're hovering, churning. I've said this for a while, and we may just churn until we can pop a higher high, and then watch out. Seen this before. All right. GLD can be a way to play gold. One of my favorite the way I made my mom's money back was to play a miner. I played this one from this low back here. I bought, I think it was $9 calls. I bought like a lot of them. And I sold them right up here after I made her money back from the Ponzi scheme. I flew out as far as I could. It's probably December 2020 calls at the time. I don't know. This was before I was a guru even. I rode that puppy hard. That was a 1, 2, 3, 4 potential. And then it overlapped. I was like, 5. And then you can see what it did since then. No bueno. So what does this one got to do to be interesting again? Break above that trend line. Yeah, other ways, other ones. And look at this one. That's a gnarly pattern there. Whew. Why'd I play GOLD, Barrick Mining, over NEM? Well, it's just a matter of preference. This was 26 bucks. The other one was 8. Better bang for the buck. But, this one appreciated 3 times. Could I do it again? Yeah. We're going to have to break out of this downtrend, though. This one may be a better setup right now than Barrick. It's down to the 786, though. Not a measured bounce. Not very good. So, and GDX, if you like the ETFs, I mean, look, it's pretty beat up too. It's just clean that baby right up. Go from that high. How many highs can we hit? There we go. 1, 2, 3, 4, 5. So we got to get above this for gold. Otherwise, gold can keep going down. And in fact, that might be what GC is telling us. Like when I was talking about it, like if GC breaks below that zone, we can just keep on trucking down here. We could reach down to these targets. And it could potentially go down to these targets. We could be talking down there before this thing resolves. That may have been the end of this move up right now. That could have been it. That could be. That's all, folks. And we go down and make a lower low. I mean, that could it go lower than here? Yeah, it could extend down to 1400. Maybe that was the whole first move up. We retraced the 618 here, right back to that low. I don't know. It's hard to tell what the pattern is exactly right now on gold. And I closed my position when we popped that target. I don't have any long exposure to gold right now. QRVO. It's almost like Cuervo, but Corvo. Anyway, sideways, nasty, gnarly. Don't trade it. AMD gave me my money back, and I got out of the way. I do think it's going on up here to 140, possibly 150, but it gave me a get out of jail free card. I bought back here on the pop. It had lost like 50% of its value. And yesterday, that pop, I came back up 5 cents to the good on my options. I closed them out, man. Off. This one's not, it didn't do what I was expecting it to do. I just cleared on off. Wait for something better. All right. That's always when I'm down like 50% and it didn't really do anything that would warrant being down 50%. Like, it was still at, basically, the stock price was at the same price where I bought it. I mean, where I'd taken my calls. And so yesterday when it popped and I came back above even, I was like, done with this. There's too much IV built into this thing. Too much implied volatility. So out of that one, I may buy a share or something just to see, but yeah, not playing that one. Better opportunities other places. That's not one of them. That's a dumpster fire of a chart right there. It looks horrible. Going lower. EMPH. Another one. Looks pretty horrible. Okay, go lower. RH. Another one. That's sideways choppy bullcrap. Big truck. And Lulu popping targets. Almost to the breakout. 545 on the upside. Me and Lulu don't get along, so I'm not trading this one, but 545, 623. HCP. That's bounce off the roadmap line, going lower. Target. 17. HON. Sideways choppy crap. Lower highs. Better things to do. I got better things to do than to mess with that. Not effing with that one. Toyota Motors. Looks like it ran out of juice. It didn't fill out that Head and Shoulders. Well, maybe it did, but not in a very clean way. And that could be a shoulder, head, shoulder. I don't know. That's consolidation right at that. Hadn't really gone anywhere for months. So popped up in there in September and just kind of hovering. Can't break higher. It does have resistance at the all-time high there. Seems to me they got an opportunity to go down pretty wickedly if we start having some economic condition problems. TMF, right up to the roadmap line. Do we break through or do we turn down again? This is the big question on everybody's mind. Last time we were doing this, came up in the vicinity. Everybody thought we were going to break out, and then we crushed it to the lower low. And we did have a 1 for 10 reverse split, which is not bullish. It's not bullish. That may be on the way to 32. Watch out. Would not surprise me one bit to crush that one on down the end of the toilet. FNGU still hovering. Do we pop it before we drop it? Do we drop it before we pop it? Not sure. Yeah, why do you want to trade that? Yeah, exactly. SAP. Wow. Excuse my stomach. Beautiful. So this large correction that took forever. We're right up to the 1272. This is a big time frame. Maybe in a monthly. Yeah, it was a monthly pattern. Look at that. Monthly roadmap line bounce. 149. May retrace back to 134 before we push on out to 169. Beautiful move. These patterns work on all the time frames. Google still churning. That's a lower, 3 lower highs. Be careful. 4 lower highs. 1 lower high, 2 lower high, 3 lower high, and the original one. That one might that definitely would give me caution until we're above that. QCOM, hey, pushing up right into prior resistance. It's got a zone right there. Got to get above that to go higher. Tried before, we're trying again. We could rally right up here, which is it's like the watermelon seed squeeze situation. I don't know why everything's shifted. It's so weird. Anyway, kind of had this range in here. This right here. Line it up. When we break out of the consolidation, we could rally right back up to the prior high. That's potential there. And that's the list for the day. So there you go. 4605. Do we break 4607? Do we do it? Do we do it? I don't know. I got an alert. Set right there. Does it go off? It's actually 4608 is where I have my alert. So close. That would invalidate the immediate downside setup, but that doesn't mean we won't get a retrace. All right. It just means we probably won't go lower low than what we saw in October. Probably. Means that this move up is probably bullish, and we're probably going to get continuation to a new high, higher than what we saw right back over here in early 22. Be careful out there, everybody. The money you save may be your own. The account you save may be your own. Nobody watches out for your money like you do. Nobody watches out for number one like you. Hope you have a great day. I'll be back again Monday. And yeah, my turquoise monster, yeah, a little see-through mango flavor. It's got a turquoise can. So, all right, everybody. I'll be in Discord most of the day. I have a sales thing for Jeff Smith. We're going to do an encore about 3 p.m., I think it is. And stay safe out there.